Hello and happy Saturday, August 15th, 2026. Welcome to the weekend update. I want to thank you for joining in. If it's your first time, welcome. I go over a number of instruments. And if you look at the comments or the description below, if there's a certain instrument you're looking for that I've done, you can just fast forward to that if you don't want to see the whole report. And as usual, as a certified research analyst, these are my views and my entries and how I'm looking at it. I ask that you do your own due diligence because trading and investing has risk, but it's also for educational and entertainment purposes. I want you to try to learn to see what I'm seeing. I'm always happy to help. All you got to do is comment below. Um, If you follow me long enough, I have removed instruments. I have added alerts. So when those alert levels hit, I will bring them back. So we're not looking at kind of the same chart over and over. And if you find this useful, if you would like, subscribe, follow, share. I would appreciate the help as I do this for you folks every weekend. Let's get into what catalysts moved the markets this past week, which was August 8th to the 14th. U.S. equities were mixed to modestly higher overall. The S&P 500, the Nasdaq edged up for the third straight week in a row, while the S&P and Russell 2000 hitting record highs at points. The Dow finished lower. Key drivers include softer inflation data, reducing near-term Fed hike odds, ongoing strong corporate earnings, especially the AI-related stocks, geopolitical energy developments, weaker consumer retail data, and AI infrastructure news is kind of the whole basket of information. We had CPI and PPI came out this week for July. Consumer prices rose a modest 0.1% month over month and 3.4% year over year, and the core 0.2%. Largely in line with or slightly softer than expected. PPI rose also softer. The headline was flat. The core was positive 0.2. This eased concerns about a more aggressive Fed tightening. September rate hike odds dropped notably. That's why we saw indices rise and gold rise because neither one of those like rate hikes. Um, Strong Q2 corporate earnings came in this week, especially AI and tech-related stocks blended in the S&P 500. Earnings growth was robust, over 50% overall. Still strong, excluding big one-offs like Alphabet, Amazon, etc., with high beat rates, like 86 to 87% of the companies that reported beat their earnings per share. Uh, in terms of the Middle East, still an unknown, guys. Broken record here since July, the end of February. Ongoing uncertainty and lack of clear deal on a fully reopened or a fully closed or fully blockaded or fully controlled Strait of Hormuz has just caused a lot of chaos in the oil market. And I think that it's priced in right now. The markets don't even give a shit anymore, honestly. You can see that they're just going to keep running. So we will see. Um, we also had what did we have? We had come in, we had weaker retail sales on consumer data. So sales are down, the consumer's getting smashed by inflation, and that's no surprise. Coming week, guys. Let's look at the coming week. So we have probably the biggest catalyst we're going to have this week is the FOMC minutes on Wednesday. Now, if you're not familiar with that, it's different than the rate drop, like when they make the rate announcement whether they're going to cut, remain, hold, or reduce. The minutes actually gives us the inside look of the discussions that were had, and that's where we see that of the Fed presidents who split, who wants a cut, who wants a hike, who wants a hold, and that kind of does let us see on the inside, and the markets do react to it. We have housing and industrial production data on Tuesday. Um, we have flash PMI on Thursday and Friday. Other than that, initial jobless claims comes out Thursday, and any announcements from Iran or the White House could move the market. So without further ado, let's look at the charts right now. All right, guys, let's start with the Nasdaq. So the key level right now, as we're approaching, is 30,000 to 31,000, which we called that as top back in April. We predicted that for happening in May. On this run, we thought that we would see 26,000. But guys, I honestly believe at some point we have to test this market structure. It has not been tested. Um, However, on a technical basis, This was the near-term bottom. One thing you can do here, folks, is you can set an anchored VWAP to that bottom. So we get a volume weighted average price on this current 2 to 3 week run. Oops. You do that again. Double click, make that green. There we go. All right. So above we have resistance in that 30 to 31,000 box, and then below the all-time high in almost this runs anchored VWAP. So there's going to be, as of now, a lot of support in that 29,000 to 29,250 range. There might be an opportunity if markets hold to get into some of the AI stocks that are commensurate with that. I don't believe that we break 31,000 unless a deal comes out. We can, but I believe it'll probably be a wick and then come back down, which would be known as a false breakout. I think this is going to be a very suppressive price until we get a determination that the war is over. Commensurate with this, I am short or long. I'm short the markets, which is going long in SQQ. Here's my dollar cost average. I am underwater on this. This is an insurance policy. If you want to know more about it, watch last week's video. I will be out of this trade if the NAS hits 31,000 approximately. The S&P 500 since last week. Last week we set an all-time high. This week we chopped up a little slower than the explosive movement last week, but set a new all-time high, which is now about 78.17, and it's kind of hovering there. This is looking a little bit half message. We could pop again. We've jokingly said 8,000 anyone, and it's quite plausible, but be careful here because on the slow increase, we do have decreasing volume. So there's overhead resistance, and it's a great place to find mean reversion levels. One thing that when you're doing that, I like to look at is the New York Stock Exchange McClellan Oscillator for the entire market. Let's look at that oscillator. So that oscillator right now is at 14, so there's plenty of room to the upside. When we get above 60, like we did here, we can call mean reversion levels with confidence. Perhaps we get to 7,900 or 8,000, where this is very overbought, and we can sell that level for a decent short swing. And when that happens, guys, follow along because I will call it here or one of the groups that I support. The NAS also, the NAMO, which is the oscillator for just, oops, that's the name. Let me grab the right one for you folks. Is at 28. So NAS has more room to the upside as well. And then when we get this extreme oversold, we can sell it down. We're going to monitor it. It has been chopped in this range here for quite some time, for multiple months. So we'll see what happens. This is something you check on at the close of day each time, and sometimes weekly. It's not something you're going to use a lot, but it's very good to know when you can match that with mean inversion levels that we give you. What does that mean? Resistance levels overhead. The Russell 2000, same thing. It looks just exactly like SPX. Last week, we set an all-time high. We equaled all-time high. We had a mild throwback. I'm surprised we didn't throw back to the previous all-time high, to be honest, but it did hit this level that we identified exactly, and now has pushed into new all-time highs. Current all-time highs approximately 30.70. Again, decreasing volume. Decreasing volume might show a little exhaustion, so we could see an upward push here in small caps. But again, when this dropped, when the NAS and XPX dropped, we did not tap this green line, which is the anchored VWAP or volume weighted average price for the run. I think that we see that, right? 28.65. Now, do we see that before 31 or 3,200? At this point, I'm not sure. Everything is running despite the war happening. So we'll keep an eye on it, guys. Right now, classically, this was a buy signal right here. This two candle close above the all-time high anchored VWAP into all-time highs. You would look for a discount and then run it if you're trading any Russell related product. Now, oil is very interesting because we talked about oil. We talked about buying this. This is the gap from the war, right? The red line here is the all-time high. This is the high of the war spike. This was the range that set in the heat of the war. So we have some very defined numbers in oil, and it's playing out very well. We called the buy in this gap, and we said run it to that all-time high, which that hit. It did actually pierce and then fall. We also this week, I said you could short that all-time high anchored VWAP right there at 84. Remember, there's a buffer around it, right? 50 cents to a dollar because it's a psychological zone. We're not the only people seeing that. And you could be in this short back down to this box. Now, however, for the groups that I support, that I called this short, if you caught this short, you got in, you need to be break even right now, right? So you're in the money, a couple dollars. I think shorting oil right now, and I've mentioned this, is higher risk than buying it. I would, if I had to choose, I would buy down here rather than short down here. But if you're in this short, you have to be quick to run to break even. So this trade should now be break even. If you get kicked out at what we call par or break even, that's fine. You can make another attempt because the next buy is above that red line, a confirmed closed filter above it. If things heat up, you can buy in around 84, 85, 86 even, and then try to run that to back to the top of this range at 100. If something catastrophic happens, we hear the word nuclear, boots on the ground, this will probably spike to 150 pretty quickly. But keep an eye on that, guys. We've had buy plans work, and we just recently had a sell plan work. So let me know in the comments below. Did you trade it? Google, we still have on the report because you remember last week when it was running, I said you got to be careful buying it. It did throw back, right? I believe the buy zone is still around 350, 300 to 320. Honestly, I know that's about a 8% buy zone, but I believe that's where it's at, where this gap exists. We tapped into it exactly and then ran, and a number of you guys hit that and reached out to me and thanked me for the trade plan. Phenomenal. That's what I love to hear, guys. I put out the trade plan, potential entry. You did your due diligence and bought. Right now, it's trapped between these two anchored VWAPs where maybe the discounts at 340. I'm going to be stubborn and wait for it to drop back down a little bit here, folks. So keep an eye on it. You can set alerts I would set an alert, and let's do that now. Let's set an alert for 320 because if it breaks that, that's going to be into our buy zone. So that's Google. Microsoft, again, big gap up, another gap, and then it's selling off a little bit on lower volume. It may continue higher. This is the all-time high anchored VWAP. This was a confirmed buy over that, and then gaps create support resistance. But I said, so there's some minor support resistance right here, but I said last week, if we come down and tap near this all-time high anchored VWAP, there's your all-time high. You can run this buy with a defined loss, because look, we just had a golden cross. It's just developed. That's good. That's when the 50 crosses to 200. That is actually an institutional buy signal. Um, that it's more probable that it continues up. So we want to try to get that discount somewhere in here, guys, somewhere near that all-time high. And there's this little gap right there. So you could potentially size in here, and then try to run it back up. So if you own Microsoft, I would raise your stop loss. I know a lot of you guys are long-term investors. I get that stop loss up around 420. Just in case, I mean, that's $100 behind, not quite 100, but that's 75, $80 behind the price. I think you're fine there if you're continuing to hold it long term. If you need a tighter stop loss, get it about 460. So you're just under this gap. That is Microsoft. Let me know in the comments below. Do you own any? IonQ has just done nothing but pay us, folks, on each call. It paid on this call. It paid on this call. It paid on buying the IPO anchored VWAP. If you followed me long enough, have you followed me long enough on these? And I said run it to the all-time high anchored VWAP right here. So we're still in this trade plan. You guys most certainly need to lock in some profit. I'd lock in at least 50% in hopes that it breaks that all-time high because there'll be a beta bounce or a drawdown. You can see that it almost touched it, pulled back. It's going to knock at that door and then hopefully break and then see if you can ride it up higher. Otherwise, once it breaks this, if it breaks, right? Let's say price comes down, it breaks it. Once it breaks that, get that stop loss, just a buffer below it and see if you can write it into market structure here, market structure here. That's how you do the trade plan in IonQ. Bloom Energy, not much different from last week, but why I left it on the report was this. Do you see the all-time high anchored VWAP? If you follow me long enough, you know it's the red lines on my chart. Green lines are normal VWAPs. The burgundy line is the 200. The purple is the 50. So those are exponential moving averages or moving averages. I use exponentials. I've explained this before why I do exponentials as opposed to regular moving averages. Um, but I want you to see how many false breaks there are of this. You're like, well, price went above it. It did. But those are known as false breaks when it closes back below. So there are a lot of sellers sitting above that. I just want to point that out for you, like how you can see something. If you're a long buyer, top wicks are against you. Top wicks indicate selling overhead. So I would look for a discount in Bloom Energy. The runs anchored VWAP is way down here at 149. That's nearly $100 low. That might be a bit of an ask, but if you can get into Bloom Energy lower than this price, I think it's best. Now, the only way that you get the next buy signal is if we get a 2-day closed filter with increasing buy side volume above that level. So right now, it's not a buy. Matter of fact, you could actually short this. And I'm not recommending it, but I'm going to show you the technical level. We just had a closed there, and you put your stop loss below those wicks, and you try to run it down lower. You probably won't hit this TP, but you can trail it down on a discount. That's how you would trade plan the technical analysis here on a short entry. IREN hit so this trade plan from 3 weeks ago, um, activated off the VWAPs were identified, and I said run it to the all-time high anchored VWAP. Look what happened. We falsely broke it this week. So that trade plan paid. I still believe that we're a bit range bound here. So your next entry is going to probably be the same, 32 to 34 in IREN, IREN. All right, guys, the moment everybody's waited for, let's get into metals. So, gold, this formed an descending triangle, puts downward pressure on it, 68% of chance of it breaking downward with a 32% chance that it breaks upward with the strongest move. And that's what happened because the catalyst came in right here. Go back and follow my other videos. You know what that is. But I'm on record saying that if it does break upward, right? Now, I was predicting a downward break and support around 3,300 to 3,500 because you have to identify support and resistance because we had a higher probability it broke down than up. However, the lower probability phase occurred, and I identified 4,400 as the resistance. And look what happened. We did have false breaks, 4,400, but it is there. I still believe that it runs to the all-time high anchored VWAP up here around 46. It's just a matter of how much it's going to pull back. You can look for entries around 4,300, a close above 44. Any discount in here now is good. I've also been asked, is 4,400 support? When you get breakout like this off that level, so we've got an explosive breakout. The next time it comes down to 4,400, it should not break it. Like here, the probability was strong that it would break it because we had descending resistance, but now this breakout strengthens that level. Does that make sense to you folks? So if we ever see 4,400 again, it's a buy. Silver, it's out in the middle of nowhere, but doing exactly what we said it would do. Buy zone was 54 to 56. We did think that it might break down and hit 45 to 49, but the same catalyst affected gold, affected silver. It didn't move up as strongly as gold, but that resistance level is 71 to 73, 71 being a key level and 73 almost 74 being the all-time high anchored VWAP, where any buys here you would run to that level. And then I also talked about shorting that all-time high anchored VWAP with a very small and disciplined stop loss to see if you can catch a number of points on the way down. Again, I'm not saying it goes all the way back down to 54 or 55, but you could do this as a trail for multiple dollars in silver. As it sits right now, I would wait for a clear signal as it is priced between two key levels. Platinum is doing the exact same thing as silver. It's priced between two key levels, the all-time high anchored VWAP up at 1927 and a key support zone, 1,550 to 1,560. So I would buy that level. I would sell the all-time high anchored VWAP. But as of now, unless you're intraday trading it, I would stay out until you get a test of one of those two levels. Now, copper is just a winner all around, guys. In the last report, I said buy between 35 and 40. So this week it pulled back. And in my group, I said we might only see 45 because of this regression trend line. I was right there, but on my weekend update, we didn't quite hit the discount level. Intra week, I did a report with folks, and I said 45, and it did tap that, and that's this trend line here, right? But I still like if we do get a discount to 35 to 40, I still like that as a buy, right? In case we catch a wick. Following this trend line coming into this week, it might be as high as 650. But again, that's just a size in because you want to be able to allocate funds at a lower price. And copper has already set a new all-time high. We have that all-time high anchored VWAP there, and it's probably going to continue an AI thesis in copper. A lot of experts are calling it $10. So if you miss it by your entry by 15 cents, like you had to buy 15 cents higher, you don't care when this thing's $10. KHC. Guys, this is the one that I've got the most DMs about. People are so happy about this trade plan that I put out between 22 and 24. I said buy it, realize the dividend. The next dividend payment comes out on Labor Day weekend, that the Friday of Labor Day weekend. So people bought it. They were all excited because they were up, $4 to $6, and then it threw back after earnings, and then like, oh no, I'm like, no, just this is how it works. It's fine because you're still up. And matter of fact, later in the week, I said, buy it when it goes down there again. And some folks added to their position. Some folks entered for the first time. And now you're realizing you have a small unrealized profit, but you're going to gain this dividend when it comes in, right? And then what we're planning on doing is we're planning on running it to somewhere between the IPO and the all-time high anchored VWAP for a nice 50% a gain in appreciation plus the dividend that it pays along the way. And we can make our decision what to do with it once it gets here. And if you follow me, I'll stay on top of it for you guys. DRAM, guys, we called this a buy between 48 and 50 for 3 weeks in a row now. And I said the resistance is all-time high anchored VWAP. Look what happened this week. Smacked it twice. Perfect. So if you bought it at 48, sold it at 58, you made 25% on your money. Congratulations. But I believe this is a longer term hold. Remember, this is the managed ETF that holds treasury bills, Micron, Samsung, Seagate, Westgate. So a lot of tech. And this is how you can participate in that, and especially a fund that is managed. Our next buy signal will be once it closes above that twice on 2-day close filter, and maybe that price would be 59.60, and you can write it back up. But if it dips back in close to 50, you can still add it to your portfolio. Now we've added this one. Now, guys, this is what I tell my community to do. If there's certain tickers you want me to look at, I will look at them. All you got to do is comment below, and if I get enough people that are interested, I'll throw it on a report. Now, here is one. This is Derrick Logistics. I'm sorry, Delic Logistics. Now, analysts have this. I looked it up for you folks. This is pipeline logistics in oil, so not a bad thesis under the Trump administration. I'm part of an analyst group where people with my education level are all in a group. Analysts have this anywhere from 38 to 68. I know that's a wide spread, but here's the interesting thing. What I want you to see is this throwback after the tariff. Remember when all the tariffs come back out in April? That is our anchored VWAP, our volume weighted average price to that. Okay. The red line is the all-time high anchored VWAP, and the IPO is the white. Now, we did have a drop because of the dividend payment and the earnings report. That is fine. And now it is moving back up. So look at the trend here. It is a strong upward trend since the tariff. So what we're going to do is we're going to throw in a regression trend line. Do you see oops, do you see how that tapped the bottom of it? So if you are late to this and you want to trade plan and buy this, the average price is above us. So you could literally buy this anywhere from the current price to near the bottom of this trend line. Put a stop. You have a defined risk, either $2.50 below this wick or go a little bit wider below that market structure, or the runs anchored VWAP if you want to hold it for a long time, and then continue to run it up, right? So the all-time high is here. So that's 64.27. So 64. That's where you could run it. And again, your three possible areas for stop losses up to your risk, right? Now, if you run it up, and let's say on this movement, it takes 4 quarters to get there. Well, you're going to realize a full year's worth of dividends while you're doing that plus appreciation, or it could be just one that you hold through this administration because this administration is very pro oil. That's how I would trade it since the community asked me to put it on there. If you want to participate, try to get absolutely buy off of this VWAP. If we were to see 46 to 48, you can't ignore that. But right now in the trend buy is closer to 53. And then you define stop loss. So that's DKL, Delic Logistics in the oil space. Let me know in the comments below. Are you interested? What numbers do you like? All right, guys, that wraps up my weekend update. I try to keep it more succinct. I appreciate you following. If there's something you want on a report, let me know in the comments below. And like, subscribe, follow, but please share it out to somebody you think you'll find it beneficial. And you guys have a good rest of your weekend.